life.
Hi, Warriors. Dale Pinkert here with TradeGATEHub.com, powered by TradeView Markets. Check out their power by opening a demo. Very competitive spreads, tightest spreads out there, really. I've heard it from some people that have checked them out, tried them, trade through them. Let's get to the markets. As you know, on Monday, we were talking about the pound, that the pound needed to get over 114, which was a wave 4 of lesser degree, to prove that it wasn't just a little ABC and was going to, we were going to have another route to new lows. Same scenario in euro. Some people are saying it's an ABC. That was, at the end of last week. But the extension of the rally that we had over the last few days, I think, changes the picture. And I view what's happening here on this give back in euro as setting up buying opportunities if you've missed the first wave of this move. And here in TradeGATEHub.com, put out a buy for the community at 95.50. So that was a pretty good ride that you had. Also, there was a short earlier in the week, Sunday night in Canada from up in here on a third drive. So the big question is this pullback for real in Canada? Are we going to make new highs? Was this rally the beginning of something new in euro, or is it just another rally to sell, like I'm sure there are many euro bears out there saying, salivating that they had another chance to get short euro at parity. So is this a type of move that's just going to abort and wash out to new lows? The RSI would say no. Say yes, that it's possible. Look, you have confirmed lows here in euro. But I think with the backdrop of what happened in the UK and some of the action in some of the outside markets, that I view this as I'd be looking to buy euro weakness, sell dollar strength. I'm going to wait till after the NFP. Hopefully we get a strong number, not overly strong, but enough that they continue to buy the dollar. I think this 97 level, 97.50 level could be a good entry for longs, being wrong under the low. Cable outperformed on this rally, basically went from 103, call it 12 cents. So maybe we could see 110 to 108 for a pullback for a wave 2. And it doesn't all have to complete by the NFP. We could have, even though this was maybe a couple of weeks of action, a week of action really since the BOE, going back to, last Wednesday, I believe was the panic day. So it doesn't have to complete this correction on the NFP. It could take a couple of weeks to consolidate these gains, get some type of zigzag or some continuation formation to develop in both euro and cable. I view this weakness as a buying opportunity for a pullback wave and then a resumption of what happened here. And this was a pretty good rally. We rallied 450 pips, not as much as cable, but 450 pips. 1.618 would be about 7 cents. So say we pull back to 97, the next rally could give us 104. 105. So looking to be a buyer there. The yen is trying again, came off again, but we have yields, which also I talked about on Monday, that it would be normal for it to pull back towards a previous high. And the previous high was this 350 level here. Okay, before we had the pullback. Close enough, got to 356.5. So perhaps we have some type of failing rally that develops. I actually think that's what's going to occur, is that we get a lower peak and another wave down of lower yields to come. I'm not looking for 4% to be taken out. So if you're trading notes, and actually I've noticed that the shorter end of the curve is stronger now than the long end. So we had a much nicer move in the 10-year than the 30. Because perhaps we put in a lower high in the 10-year up around here, But then when I look at TLT, looks like we could even challenge the lows again. So it looks like we have the yield curve from moving out of inversion into the yields beginning to go up more on the back end and less on the front end. So let's take a look at the metals. You guys know I've been very bullish metals. Last week I talked about a reversal week to the upside. This was key right here at 1680. That was a breakdown that we had in the market, and this was a reversal week. So I would expect 1680 on any pullback, another $30 break. That'd be a buy area for me. Silver, I'm thinking between 20 and 19 and a half. I have a lot of confluence here. So this to me also is a buying opportunity. We're getting a correction now in the gold silver ratio, which is normal, but you look at it on a little longer, a little shorter term, and this no divergences at the bottom here in the 4 hours. So this could just be another rally to sell, maybe back at 85, 86. So silver will be a little weaker than gold for a bit longer, perhaps until we retrace here. But just like I like both cable and euro on a pullback, I don't feel the same way. I do feel the same way on gold and silver for buying pullbacks here this week. I just wanted to touch on something in Canada. What's interesting about Canada between its cousin, the Aussie, is that I could see the potential of Canada not making a new high. Whereas when I look at Aussie, new lows look like kind of a layup to me. This was compared this rally, and I thought that Aussie might be the relative strength performer because it held up better on the way down, but completely different looks between euro and Aussie. And Aussie looks vulnerable for perhaps another low to the downside. Again, we have confirmed lows here, but much weaker chart pattern than I have in euro or cable. And again, the yen, let's see if we could challenge intervention levels. We'll see what happens up here around the 145 level. Copper was on the verge of breaking out to the upside. It's had some pretty good action. I pointed out last week, this is one of the only metals that did not take out its June low or July low, and still looks like it, as long as we hold this 3.25 level, my bias is to the upside. We've had a pretty good give back in the S&Ps, but compared to give back in S&Ps, when I look at a 4 hour, see how shallow it is so far compared to look at a 4 hour in euro, much deeper. Gold, but silver much deeper. So the S&Ps to me, again, this would be a break to buy if we have a little bit of an interest rate scare. I don't think that the S&P should take out 3680. I would view this as a buying opportunity. I know a lot of Elliotians will probably still be bearish. They need the market to close back over 3820 to invalidate a bearish count, which takes it to new lows. This action to me looks pretty constructive, so I'd be buying breaks. So S&Ps, I think, have more to the upside before we fail. This would be a natural first place up here around 39 and a half. That would be the breakdown that we had of a pretty major uptrend, right? Let me show you on the weekly. And markets at times will break down and then come back to retest the breakdown on a trend line. So you have some confluence there at 39.40. I actually think if we get above this, that we're going to challenge 42 and maybe even challenge up here, up around the 4,300. So I think there's a lot left. And you know where you're wrong now. I remember saying that the market could not tolerate two closes under 3,600. And we just had that one close on Friday there. But on Monday, we had this 4-hour glaring divergence before this rally. So I think this is just the first part of it. And just like gold and the dollar, they're all one market. They're just moving in different degrees of beta and magnitude. I'm a buyer on a break here as well. Some of the shares have done real well. I know they're down today, but you take a look at something like this. There's a silver share. I'll be looking to buy breaks there. Here's another one, pretty potent performer. Even Newmont before today was acting pretty good. I'd be a buyer of a break in Newmont. All of these shares, pretty good move in GDX. I'd look at breaks to buy here, maybe around 23.5. So I don't look to do anything new until post NFP. I think if you trade into the NFP, it's only on profitable positions, and you lighten up and take profits and tighten up your stops to BE, and then look to react to it. My preferred scenario is that, a lot of people are hoping for a weak number. I actually would not mind seeing an inline expectation, and they try and run the dollar down some more for an hour or so after the number. And as we approach my fib levels and technical levels that I have shared with you during this broadcast, I'll be not thinking about what I'm going to be doing. I'll be executing. So prepare yourself for post NFP. I hope that we're adding value to what you're trying to accomplish as a trader. I have an excellent interview tomorrow with Julian Brigden of MI2. Julian was short the market. I remember talking to him. He was short S&Ps before the breakdown. I think it was, let me just pull up a daily. In here, so, maybe took a little heat, but then we had the big breakdown. Nice trade for Julian. Be interesting to see what he's thinking on the dollar. Also, we have a G10, I believe, meeting next week. I don't think the G10, especially for the dollar's under pressure, I don't think they have to wait to intervene for the cable to be at par. They would almost be more effective if they did it while the euro was making a higher low, cable was making a higher low, and step in and really turn the yen, because the yen really didn't have much of a turn with dollar weakness, did it? So it looks like the BOJ might get tested out on a strong employment number. We'll see if they come in, or that's a trigger for concerted central bank intervention. Good hunting, buy breaks. Dale Pinkert at TradeGATEHub.com, sponsored by TradeView Markets. Remember, don't just count your pips, count your blessings. Good hunting.